over the next 5 years, I think there's a lot of opportunity. The key is with all things, you got to make sure that the numbers work. You got to have good systems in place. You got to have good people around you.
Welcome to the Real Estate Riches Podcast, your source for real estate investment education. Each week, we'll feature an interview with a successful investor who will share their story to help us better understand the business of real estate investing. And now, here's your host, Gabe Da Silva.
Guys, so welcome to another episode of the Real Estate Riches Podcast. I'm here with my good friend, Matt Weber, Chief Revenue Officer at Alpha Funding Partners, my preferred lending partner. Been with them since I started in the business, have fostered an amazing relationship with them, and we partner together on dozens of deals. And so honored to have the opportunity to just jam with Matt on all things fix and flip in a COVID world, all things cost of capital, lending partnerships, and how to foster good ones. And so we're going to unpack all that together. But before we do, Matt, jump in, tell folks a little bit about yourself and then your kind of journey into the Chief Revenue Officer seat at Alpha.
Yeah, absolutely. Recently, so I've been working with Alpha for the last 4 years. It's been an amazing 4 years. It's flown by. It feels like it's only been 4 months. So much has happened. I feel like this year has felt like 4 years. But before working with Alpha, I was a personal trainer. I was an athlete in high school. Kept playing as long as I could until my shoulder had given out, and I switched over into personal training. I had to figure out how to, make a living. I was 19 years old, so I started doing the personal training. Did that through college. Got my degree in biology and exercise physiology, and I was working at Lifetime over in Berkeley Heights, and I ran into one of our brokers that was a mutual friend of David Hansel, one of my principals, and he said that David was looking for someone to help out on the sales side. Alpha was, we've always been in growth mode. We're still in growth mode and constantly expanding. And it was a tremendous opportunity. He's like, I want you to get a real job. And this is not to say anything about personal trainers and personal training not being a real job and not being a career, but one person once told me, something that you really enjoy doesn't have to be a career. It doesn't have to be a job. You can do it as a hobby. It can be a hobby, and it's okay to just be a hobby. And it resonated with me, and I realized the opportunity in front of me. I always thought of, I always was so interested in real estate. I was always interested in finance. I never got the opportunity to spend the time in school to learn about those things, because when I was in school, I was all science. It was biology, chemistry, organic chem, science. So I saw it as a great opportunity. I joined forces with Dave, and he was like, I don't want you to know anything about real estate. He's like, I'm going to teach you everything from the ground floor up. It was so nerve-wracking. It was so anxiety-ridden. And, the first couple months were really tough, but I got my legs underneath me, and I am so blessed and so grateful that I was able to make that really uncomfortable jump. And 4 years later, now I'm helping out with all things revenue, business development, sales, marketing, making sure that we're a profitable company, we're growing, we're expanding, really being on the front lines to help grow Alpha.
Look at, so right out of the gate, so much gold to unpack in your origin story, the value of powerful mentorship, the willingness to seek discomfort and get into a space that you're not familiar with. This is a hell of a start, guys. So if you're listening, obviously take note of that, right? Seek discomfort, grow, find the right mentors and coaches, partner with them. So let's kind of talk on where we are now, where this podcast will find folks listening to it in quarantine, in this COVID transition, because we wanted to talk on, and I don't know that I kind of led you this one. I didn't tee this up for you ahead of our call, but I was going to talk on specifically a deal that we had put in front of you when things quickly shifted. And we had brought a borrower to you on a deal we were looking to wholesale. And I don't know if you remember that conversation, how things had shifted. So maybe talk about what had happened early on versus where we are now with cost of capital, accessibility to capital, how you guys are screening the borrowers.
Yeah, we've been on a long, probably 12, 13-year run right now with the real estate market, the economy, and from the lending side, capital has been very accessible. There's been tons of people in the space. There's been tons of money that's been flooding the space. And up until February, I mean, you could go as high as 100% financing. You could have credit almost 600. You could have no experience, and you were going to get that deal funded. As soon as March hit and the shutdown orders were instituted and COVID had really spread, I was actually in Atlanta at the time. We were at the Atlantic Mortgage Expo, and I saw the Dow. The Dow went from the 28,000. Every day it kept dropping 1,000, 1,000, 1,000. It was down to 19,000. The Dow at the time. And we got a call. We were, this is when David and Mark, we were behind closed doors all day for those couple days during that week in the middle of March. And we found out that, we had an in-house DSCR bank statement program for buy and hold, for rental program. Our fix and flip program was totally going to be changing overnight. Within 24 hours, our fix and flip program went from the traditional 90, 100, 600 credit, maybe if not no experience, up to a 65% ARLTV. And now all of a sudden, you had to have 3 deals with HUDs. I need in and out HUDs. So I need your purchase HUD. I need your sale HUD. I need copies of both. And I need operating agreements to show that it was actually you. And then we need 3 of them. And then I need you to show me 3 months of bank statements showing you the liquidity to actually do the deal. Not only just your purchase, the down payment for the purchase price. Let's just say it was 20% at the time in March, and then also 20% of the rehab plus an interest reserve, which was, I believe at the time, was 3 months of interest payments you had to have up front. And then you had to have working capital, and you had to close on the loan. There's transactional costs. So they had to bring all of that money in liquidity, show that in bank statements, plus show your HUDs. And we were only lending, this was 80% loan to cost, the interest reserve, plus the experience requirement, and credit had to be 650 or better. It was a total shock overnight. Mm-hmm. Within one day, our world changed. And that was, I think, March 15th. I think it was the Wednesday or Thursday in the middle of March. I forget the exact date. And we had about 60 deals in the pipeline. I was on the phone with an investor before, and we were telling them about how things, kind of the same conversation we're having now, where we were, where things have changed, and how it's gotten to where we are today now in August. And we had about 60 files that were in process, and they all were subject to being underwritten, because now, even if you had the approval going into, say, March 15th was the day, it didn't matter. If you were approved on March 12th or if you were approved on March 2nd, now everything had to be re-underwritten, and obviously under the new guidelines. And it was a massive hit to us. I mean, in the last few months, we've slowly loosened up our reins a little bit. Investors, I think sentiment from the capital side, capital markets, have become more and more confident. And I think the money is starting to come back into the market. You're seeing some, non-QM money come back, some new construction money come back, although that's still pretty scarce. Fix and flip, the leverages are coming up a little bit. Requirements are loosening a little bit, because I think the confidence is there. You're seeing that with a lot of these, the KPIs with the real estate. The inventory is still low. Home prices are going up. You're seeing a ton of units moved month over month from May to June, from June to July. There's just a lot of really good reason to be excited about everything moving forward. The one negative thing is just there's not a lot of inventory, but if you can get through and you can find a good deal, there's a lot of opportunity.
So depending on where this video finds you guys and when you're listening to this, we're going to push it out as quickly as possible because of how relevant it is time-wise right now. The history repeats itself. So be conscious of what Matt just outlined for you, and that does happen, and that did happen as fast as it did, but we're not going to paint the doom and gloom picture. You just kind of transitioned into there is reason for optimism. Things are improving. So let's then kind of talk about fix and flip in the post-COVID world, which you kind of alluded to. Things are lightening up. You guys are lending more readily, more freely. What's it looking like now?
Right now, I think we're pretty much as close as we were pre-COVID, aside from the fact that we are going to institute and maintain some of the measures that we put in. It was very difficult to get bank statements from all of our investors on a consistent basis. So that was something that we've been working on for years. We've always wanted to get bank statements for proof of liquidity. It helps us from the lending side as we continue to grow and provide better capital to our investors. Providing those types of documents is very critical. Having everybody provide them, sometimes when there's a ton of competition and there's a lot of people out there that won't ask for them, It's very hard to just tell everyone, I need bank statements starting tomorrow. So I think one thing about COVID that has definitely helped us is that we were able to institute that, and it was either all or nothing, whether you had them or you didn't have them. That was a prerequisite, and we're going to maintain that. But leverages, interest rates, interest reserve, we're not requiring an interest reserve currently. I would say we're pretty much to where we were pre-COVID, aside from maybe asking for, the documented HUDs just to see experience. Otherwise, depending, because we're going to see where you are and what tier you're going to fall in. Our pricing is definitely experience based. So if you're in that 3+ deals in the last 3 years, which is basically one deal a year, if you can show us those 3 HUDs, we can get you in a very aggressive bracket when it comes to leverage. If you're in that 2 or the 1, if you're a new investor, right now we currently, as of August 2020, depending on when you see this, we can't lend to new investors right now, but 1 to 2, you would just bring a little bit more money down. The credit requirement is just a little bit higher as a barrier of entry for us. But everything's pretty much back to normal. I've been seeing last month was a good month, bounce back. This month, even busier. The real estate market's booming right now. It's very exciting.
So there's inventory demand. So as an investor who's actively looking for deals at all times, we've started to feel that pinch for a few years now. We know that there's a lot more, I don't like to use the word competition, but there's a lot of eyes on deals, a lot of offers being placed on things. Sellers know what they have. For the most part, you're not getting those home runs like you used to. So finding the deal, right, is still equally challenging. Availability of capital, like we're talking about, is kind of opening back up. Cost of capital is dependent on experience and a whole host of other things that you kind of alluded to. We have reason to be optimistic is what I think we're trying to convey here. Like, folks, if you're listening to this, don't worry that you can't finance a deal if you get a good deal. Is that fair? Is that if you get a good deal, right?
Yeah, and one thing that's really exciting, as we literally speak, this is breaking news, we're doing an alpha pitch night event. I don't know if we're going to actually call it a alpha pitch night or alpha mixer, alpha connection machine, whatever it's going to be called. We're going to brand it a certain way. So obviously we are unique, but basically what we see is that there's some people that can't qualify currently in the state of where capital is and just real estate overall. It's difficult for some people to get into a deal. There's also people that are out there like yourself who are constantly looking for deals. What if there was a way that we could connect everybody? And obviously at the same time, we can't go out and have everyone all in one room because of obviously the realities of COVID, the life the world we live in right now. So what we're going to be doing is once a week, we're going to be having this virtual event where everyone can come in. And if it's a new investor who can't qualify with us, but found a good deal, we don't want to deter them. We don't want to tell them no. We want to see if maybe there's a way that we could connect them with an investor who does qualify, or maybe they can partner with somebody who has experience. Maybe they can work out some sort of an agreement where, I don't know, depending on how much equity each person gets, but if they can get that first or second deal under their belt, whether it's with Alpha or whether it's with any other lender, it's going to make them more attractive when they're looking to go and source capital for their project. So we're looking to see how can we help even the people that we can't currently help by adding more value. And we're going to be starting those in September. It's pretty exciting.
Yeah, I love that concept. I've been to the in-person ones you guys have hosted in the past. I love the idea of bridging that gap and almost facilitating the JVs. It's what we saw happen in our specific niche with those construction heavy at a level and new construction style projects. Is early on, the guy that was savvy and knew the construction didn't have the financial wherewithal to do the project. The guy that had the financial savvy couldn't wrap his head and hands around the construction. Now those two guys find each other and they're out there doing what we're doing at scale, some of them. So that's really cool that you guys are doing that and that you're going to help facilitate that coming together. And it's a pivot, so smart, right? For you guys to pivot in that. So what then has your experience been, because you guys are creative and you are doing that with the lenders space? Have you seen a lot of guys, I don't want to say go away, it's not the right word, but it kind of just
a correction maybe, or kind of like an adjustment?
Yeah.
I'm seeing there are some groups that kind of were on pause. There are some groups that maybe stopped lending back in March and just have not come back. Generally, I think because of the real estate market being so strong, a majority of them have come back. but I think they've come back now at some adjusted, they've adjusted requirements,
Mhm.
adjusted cost of capital. And because of that, you're seeing that with a lot of these lenders. You go out and you try and, shop a loan. You're seeing that you're paying a little bit more on your interest rate. You're paying a little bit more on the points, the origination fee. So maybe your costs might be a little bit higher. You might have to bring more money down. There might be an interest reserve. I'm seeing, we're also part of the American Association of Private Lenders, AAPL, and we're noticing that a lot of the lenders across the board have felt very confident knowing that if we can get an interest reserve in all of our loans, it's going to make us the default rates dramatically drop. Because if we have that guaranteed amount of money, the money set aside for the interest payments, we don't have to worry about our investors, especially during COVID, where this is, a very trying time for a lot of people,
Mhm.
making sure that they don't default on their loans with their payments. So some of them are continually doing the interest reserves. One thing about Alpha that we distinguish ourselves is that we do not have an interest reserve right now. We've tried to always stay ahead of the curve. The equity requirements into the deal and the cost of capital, I think that was just something that was, long overdue. I think for a couple of years, it was a race to the bottom with a lot of lenders, and
Mhm.
one lender trying to go below the next lender, and then that lender trying to go
Yeah.
above the next lender, and a guy like yourself, that was amazing because you just sit and you watch all these lenders fight against each other, and you're like, what's the lowest rate you can give me? And everyone wants a piece of the pie. So
Mhm.
you were getting some from like 7, 8, 9%. I mean, now it's around that 9, 10% range, but you watch another 6 to 12 months, you might start seeing that 7, 8, 9%
Mhm.
range again.
Mhm. So that's good. Thank you for kind of painting the picture of where like the space kind of is now. And again, like depending on where and when this video finds you guys, I hope that you're taking stock of what's happened. History is a teacher. So whether or not we've come slingshotting out of this by the time you watch this video, or whether we're still kind of here, or if we backslid a little bit. I mean, I don't anticipate that being the case, but depending when this video finds you, be conscious of all of that. And so now let's kind of shift gears a little bit, because we're not solely here to paint the doom and gloom picture and to give them like the data piece necessarily. I want to also talk on like, so, and not just fix and flip, but like fix and flip in a post-COVID world, how things will improve, how you specifically can improve them for yourself as a real estate investor, or just in general, because I know you and I talk offline a lot about mindset and things like that, and creating these shifts in beliefs. So let's start with the one thing that you and I always jam out on, right? The concept of integrity promises and kind of being impeccable with your word. Let's unpack that. So give me your kind of your purview on the power of your words.
Yeah. There's a gentleman named Brandon Turner from Bigger Pockets, and he has a podcast, and he said it so perfectly. And basically, the concept is, and this is something that I live on, and I've been trying to be extremely, um, I want to maintain that integrity, is just when you say something, you do something. And it's not just because you want to do it just because you say it and you're like, I want to actually follow through with what I say. You don't understand. It is so much deeper than that. What we don't understand is the conscious mind. That's important, not to diminish that, but the subconscious is so much more powerful. What we don't realize as humans and as creatures is that the power of your subconscious will dictate sometimes your conscious actions. And if you keep doing what you say you're going to do, you're telling your subconscious, you can bank on me. You can just, it's already done. When you say you're going to do it, it's already done. It's just a matter of when and how you're going to get there. But what happens is if you do it the opposite way, if you start saying you're going to do stuff and you make empty promises, your subconscious is always listening. And it's kind of like if you're trying to lose some weight and you're trying to start a new workout program. You're like, I'm going to lose 10 pounds. And then all of a sudden you don't do it. Your subconscious has been listening to you. And what
Mm-hmm.
happens is if you do it long enough, your body is all about repetition. It's all about habits. And what happens is now all of a sudden you start saying you want to do something. Your subconscious is like, forget about it. Before you even start, your subconscious already is done.
Mm-hmm.
It's already a done deal. So I've been always a big proponent of do what you say what you mean what you say. But really, if you're going to say it, do it. And what happens is there's so much power with it, but there's, Eat That Frog is a book that I really like. It's a very simple book, light, easy read. And they always talk about eat that frog. The biggest, most audacious thing that you have to deal with in that day, you wake up in the morning and you attack it first thing in the morning, because then everything's downhill.
Yeah.
And then the other thing is, by continuously doing these little things here and there, by building up good habits, whether it's waking up in the morning, doing making your bed, brushing your teeth, having a good morning routine. Your morning routine sets your day up. But by doing those little things, like, it's not that difficult to brush your teeth. It's not that difficult to make your bed the right way. Doing it consistently, definitely, but the more you do it, the easier it gets with habit. But what happens is there's the brain chemistry part of it, where every time you do something positive and it actually then is successful, you have that drip of dopamine in your brain, and all of a sudden you feel amazing, and you're like, wow, I'm
Yeah.
so powerful, I can do so much. And then you keep doing it and doing it and doing it, and then that cycle just keeps repeating. It's the same thing in reverse if you do things backwards, if you don't do them.
Mhm.
So it's just, I've always been a big proponent of, if you're going to say something, do it, and there's just so much power behind it.
As a real estate investor, that's to bring it back to what you guys do. Like, that's who you want to lend to. You want to lend to people who are impeccable with their word, and they will go out on their shield. If they make a commitment to doing this project, they won't take your willingness to lend to them for granted. So be conscious of that as borrowers, if that's who you are watching this now. In general, as just human beings, be conscious of what we're talking about, because it works in reverse, like Matt just said. Don't feed the enemy, like the subconscious. That's not what you want. You want to feed rewards, those dopamine hits that are going to propel you forward. So if you are aspiring real estate investor, no, you are a real estate investor. You need to start conditioning yourself to believe that you are, in fact, a real estate investor who just hasn't done a deal yet. Like, you are a real estate investor. And so that applies across the board.
Yeah, I wanted to piggyback off of that, because then it's not even just so much you yourself. And right now in COVID, people are not around a lot of people. Some people are quarantined, some people are isolated. But really understanding that if you want to do things that are bigger than where you are right now, you have to go and surround yourself with people that have done those things. And what happens is they're going to help lift you up. So it's all about who you surround yourself with. If you surround yourself with people that are at higher levels than you, you're going to level up. You never want to be above everybody that you're with, because all it's going to do is it's going to bring you down. So, obviously right now during COVID, it's tough to be around a lot of people, but, surrounding yourself with, whether it's like a little mastermind group, you're reaching out to a couple friends, you're staying in touch with people that are really important to you, people that help you, whether it's personally, professionally, who you surround yourself with is so, so important.
Yeah. When in this quarantine, in COVID, right, listeners have heard me say, like, this is the time to acquire knowledge. You are the average of the 5 people you spend the most time with. Now you're not necessarily in proximity to those people, but you're in proximity to people via YouTube and podcasts and whatever videos you're choosing to consume. You could be consuming Netflix and be in proximity to the Housewives of Orange County or whatever you tend to watch, or you could be watching this podcast and be in proximity to us. I eat with Ed Milet and Tom Bilyeu. Like, those are guys I follow, and those are guys I really resonate with. So I'll have meals with them sometimes while the interview is playing in the background. And so I consider myself a part of their circle, and vice versa. Well, they don't know that I exist, but that's, you get the idea, right? So if you guys are listening, be conscious of that. So as we kind of like are coming to an end of our time together, I want to be respectful of your time, but I want to ask you, let me take it deeper one more time, because I know that you're going to like this one. And so I don't often ask this question of a lot of people, but because of your foray into the real estate space, and it's been roughly 4 going on 5 years, what did you used to believe about the business of real estate that you no longer believe now? And I know there's a lot that goes into a question like that, because like when you started, you didn't necessarily have the background in real estate, and now we're in the middle of quarantine. And so what are your thoughts on like what's happened and how this business has changed and how you've grown into it over these like 4 to 5 years?
I think the first thing was, when I first started real estate, I used to just think of friends that were realtors. You would see, those signs up, sell your home with with Joan. And, I always used to think real estate, wow, this is such a light lift. All you got to do is go to a house and you sell it and you make a ton of money. It seems like such a great job. I didn't know the math behind it. I didn't know the science behind it. But now as I look at it, it's just like any other industry. It's like any other business, any arena. There's obviously a lot of stuff that goes into it. And as I've grown and I've learned more about it, you start understanding the science behind it. You start understanding the math and the numbers behind it. And I'm a big proponent of know your numbers, know your people. Whether it's your business or life, just know your people, know your numbers. And I've really tried to understand the numbers behind the business. I've understand, the people and how the whole dynamic of real estate and where I think it's going. I just think that there's so much opportunity just because right now we're in such a deficit right now with the housing stock right now in the country. And because we don't have as many units available, you can go across the country. I believe it's almost around 100,000 homes that we currently need and we do not have. If you look at, let's just say, housing starts, they just showed the numbers in July, and I think it was 1,600 homes that were started, new construction homes that were being built. But just pull that into 12 months, let's just say around 15, 20,000. You're still at a deficit of 80% of the deficit number is still not being satisfied.
Yeah.
So I look at a guy like you and I'm like, Gabe with his cape, you're like Superman, and you're like, I'm coming, I'm gonna go save all these old capes from the 50s and 60s and 70s, homes that were built for people at a different time, in a different time in history, post World War II. Homes were not built for multiple people going and working, a husband and a wife, or a wife and a wife, husband and husband, working two jobs, needing two cars, needing a big backyard, needing a big house for all these different needs and amenities. Those old homes weren't there, but there's still a ton of those homes out there in the world right now. I grew up in Livingston, New Jersey, and I just look at that town and I look at the evolution of the town from when I was born in the late 80s and the early 90s to when a lot of those homes were built in the 60s and 70s, and where we are now in 2020, and looking at some of these homes being transformed. Doubling square footage. You look at some of these capes that are maybe 1,800 square feet, and now they're 3,600 square feet. And I see that there's still so much opportunity in the next 5 years, just the repurposing of housing stock, the need for it, and the fact of why I'm so excited to work for a group like Alpha, the need for us being able to provide capital to people like you so you can build these homes and meet the needs of the consumer, the real people, the hardworking people that need these homes for their families so they can live an amazing life. And hopefully the world is better when we leave it than it was when we first found it. But the fact that we can keep the circle of life, how we can help everybody in a positive way, I think there's a lot of opportunity. There's so many houses that need to be renovated and fixed. And over the next 5 years, I think there's a lot of opportunity. The key is with all things, you got to make sure that the numbers work. You got to have good systems in place. You got to have good people around you. But it's been a crazy ride the last 4 years, but I've been very, very blessed to be a part of it.
That's super powerful, man. That our mutual friend, Ben Johannes, calls it vampire flipping. It'll never go away. The need will always be there for us. We're coincidentally doing one in Livingston that you guys are the lender on. I don't know if you saw it in our file. We're doing a new construction there. And we just took an offer again, like depending on when this video finds you. We are listed pre-construction. We got 25,000 over ask. We just came out of attorney review yesterday. So by the time you guys see this video, we'll likely have sold that house for 25K over ask.
Boom.
The market it's powerful what's going on right now, the opportunity. I want to leave them there because we are giving them, like, this is the view I want you guys to have watching this. Tell the listeners, those watching, where they can find you online. Where would you like them to go and dive into your world?
Yeah, absolutely. It starts with our website. We have a brand new website. Go and check it out, www.alphafunding.com. You can always email us at info@alphafunding.com. And then you can always contact us at 732-657-2014. I'm always available. Have an amazing team around us. definitely check out the new website. We've spent a lot of time and a lot of energy to provide a first-class experience for our investors, for our borrowers and investors who are looking to work with us. So if you have any questions, obviously feel free to reach out.
All right. We're going to link to everything in the show notes as well, and make it easy for you guys to click through and find Matt and his team over at Alpha. Like I said, they have been my preferred lending partner since I got started. I built the business I've been blessed and fortunate to build thanks to the relationships I fostered with them early on, and Dave, who's been a mentor to both of us. So thanks for being on, man. I appreciate you and all the knowledge and wisdom you've imparted upon us all.
Yeah, I appreciate it. Thanks for having me on, Gabe.
Real estate investment rock stars, congratulations on taking one more step toward real estate riches. I know that you're serious about a successful future in the real estate investment business, and the Real Estate Riches podcast is going to help you get there. Head on over to GabeDasilva.com right now and get yourself signed up for a coaching call where Gabe will help you figure out the next step on your journey. Thanks again for listening, and we'll catch you on the next episode of the Real Estate Riches podcast.